but we don't want to compete with Elon in a lot of things. I mean,
we don't want that much failure.
Yeah. Yeah, and it takes over your life, and I mean, in a way that it just doesn't fit us. But there are going to be, well, there have been important things done by Elon already, and it requires, fanaticism isn't the word.
Yeah, it is the word.
Okay. Well, it isn't quite the word, but it's a dedication to solving the impossible, and every now and then they'll do it, but it would be torturous to me or Charlie.
Warren Buffett just gave some investing advice to Tesla investors and fanboys, and this message could be all you need to know to make a good investment decision in 2024. And it could be a sign to load up on Tesla shares before its remarkable surge.
Tesla stock still has a lot going for it heading into 2024. Our very own Madison Mills is here with the 3 big catalysts for the EV giant. Madison.
Guys, I still can't get over that soundbite we played earlier. They can't even get their own numbers right on this stage, not to pick on them again. But come on, you're saying that you're going to have 20 million in annual vehicle deliveries. This current year's upcoming target for 2024 is just 2 million. So a lot of aspirational goals, to put it lightly, for Tesla moving forward here. Now, having said that, to give them some positive news, guys, I didn't know this. 3 of the 5 biggest vehicle sales in 2022 were actually trucks. So the Cybertruck move for Tesla heading into 2024 could be the thing that saves them when it comes to some of that margin compression that they've continued to mention on their earnings calls. But the big question is the next-gen batteries for those Cybertrucks moving forward. Also, the ramp up in production of those Cybertrucks. They're expanding their factories in Mexico to allow for some of that production ramp up to continue, as concerns about that production volume remain on the street. Now, we also have anticipation of that $25,000 vehicle for Tesla coming in here in the next 6 months to a year. That could be a boon for this name if they're able to kind of expand their market share by allowing for a little bit more of an affordable name. But an affordable product is not always good news for margins. So I'm curious about how they're squaring that with their margin compression concerns that we've heard Elon continue to talk about. More long term, though, guys, we've got the Dojo supercomputer and, of course, Optimus the robot. I can't not mention that. But the question is, these are long-term goals. It feels to me as fantastical as a self-driving car at this point. When am I going to see it? When am I going to be able to get in a self-driving car that takes me to and from the East Village on a Saturday night?
I'm an Optimus robot. So you're getting a demo real time.
Really?
Yes.
Is that why you're able to write on paper here that's actually a computer?
No comment, Brad, over to you.
You know, as we're thinking about Optimus, the 4680 battery, and then lastly, the Dojo, you talk about a reality check that might need to be had over at the company. They were talking earlier about this year, the Dojo being able to compete with the NVIDIA H1 by the end of this year.
Tesla's margins and revenue are about to get really tantalizing, and only investors who remain bullish on the car company will benefit from this expected surge in Tesla's valuation. Tesla continues to reshape the EV industry's landscape, with innovations that not only provide Tesla with a competitive advantage, but also contribute to its potential for a massive valuation in the future. From the groundbreaking gigafactories that revolutionize EV manufacturing to the cutting-edge autopilot tech, Tesla promises a future of safe and autonomous driving. And today we're going to reveal how owning Tesla shares, 10 specifically, can completely change your life. Yes, that's right, just 10 Tesla shares. If you're wondering how that can happen, then you better listen to this video.
You've been with me throughout so many storylines, and in this one, a deep dive into those EV stocks, those electric vehicles that have been running the show in many ways. And Steve Wesley is with us, founder, managing partner of the Wesley Group, and Garrett Nelson, vice president, senior equity analyst at CFRA Research. Thank you both for being here. We've had so many great conversations as we wrap it up. Steve, would you say 2023 did not disappoint? I mean, did you feel like there were a lot of great moments when it came to the EV space?
Look, 2023 certainly didn't disappoint at all. Look, the big picture here is the EV market's continuing to boom as prices come down. And I think expect 30% year-over-year growth globally, from 10.5 million units in 2022 to close to 14 million units this year. This means that almost 20% of all cars sold globally are EVs today. That's stunning. More price cuts are coming. Battery prices down 14% this year, 40% by 2025. We're entering into a world of EV dominance over the next decade. Big story. Will BYD, Tesla battle for the throne? I think in 2023, Tesla's going to keep the crown. They're probably going to sell about 1.8 million units to 1.6 for BYD. But by 2024, BYD is growing faster than anyone. They'll probably outsell Tesla. Big question, who wins the cost down war and how soon can Tesla get that $25,000 car on the road?
Yeah, look, and you had the Cybertruck unveiling and got those up and out, or the beginning of getting those out. Garrett, what did you make? You had a buy rating. You both liked Tesla as a stock. Were you happy with the performance of Tesla in 2023? And is it a buy for 2024 going forward, Garrett?
It was a great year for Tesla. The stock has more than doubled year to date, so they have a lot of momentum. Steve mentioned declining battery costs. Their unit costs have come down for 3 straight quarters, and lithium prices have really plummeted. So, they have a lot of tailwinds on the cost side. Also, the UAW deal increases the costs of their competitors, the Detroit 3, by a significant amount. So, Tesla has a lot of tailwinds at its back heading into the new year. We have a buy on it still, $300 12-month price target. So we think it's going to be another really good year for the company in 2024. We think they will introduce this mass market next-gen EV model in 2024. Elon Musk has been talking about it more recently. We think next year's the year. It probably won't be at a $25,000 price point, just because that was a promise made 4 years ago, pre-COVID and pre-inflation. But we think it'll probably be somewhere in the range of a $30,000 to $35,000 price point for the base model. But we like Tesla a lot here.
Tesla has a unique market dominance and innovation that sets it apart from other car companies. The automaker has become synonymous with EVs, pioneering the industry and capturing the public's imagination. With an unwavering commitment to sustainable energy and a laser-focused approach to innovation, Tesla has consistently pushed boundaries and set new standards, which all have positioned Tesla to be a prominent car company and its stock representing the best and most lucrative of all EV makers globally. Hey guys, welcome back to Tesla Tomorrow. Warren Buffett is one of the most successful and respected investors of all time, and his opinions on various companies and industries are widely followed by the market. Interestingly, one of the companies that Buffett has been asked about several times is Tesla, the revolutionary EV manufacturer that is breaking boundaries in the auto industry. You see, Tesla is a controversial investment on Wall Street, as it has a very high valuation, a loyal fan base, and a visionary but unpredictable CEO. And while Buffett has never invested in Tesla, he has expressed some skepticism about the company's prospects and revealed why it could potentially be the biggest investment opportunity of our time. Over the course of this video, we'll break down some of Tesla's money-making strategies that have been identified by Warren Buffett, as well as some key Tesla growth catalysts that have impressed this legendary investment expert. Before we carry on though, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla has set a new benchmark for car companies with its remarkable rise in the stock market. The company is valued at over $800 billion, a figure that's more than any other EV car company in the world. Tesla is also pursuing several exciting projects that could increase its sales, including Cybertruck, FSD, Optimus, and robotaxi services. These projects are likely to boost Tesla's revenue and reinforce its leadership in the EV industry. Warren Buffett is famous for making his investment strategies pretty valuable, which means that he looks for high-quality businesses that are undervalued by the market. This investing guru also prefers companies that have a strong competitive edge, or a moat that protects them from rivals and ensures steady profits over time. Some of the criteria that Buffett uses to assess a profitable company are its ability to earn and grow, the return on equity, their debt level and interest coverage ratio, free cash flow generation, and more. While Buffett has not bought any Tesla shares, he may find the car company appealing in the future, and here's why.
Yeah, and Garrett, just quickly, which names, if people want to write them down, which ones do you have buy ratings on going forward?
So it's a pretty short list right now. It's Tesla, Ferrari, luxury automaker, but about $65 billion market cap. And then in the EV space, the one name aside from Tesla that we like is Polestar, ticker PSNY.
Okay. That being said here, Steve, you know, BYD is a name that I think a lot of people have a lot of respect for. We know they were battling neck and neck. Which of the two companies, that and Tesla, could get more vehicles out? It's one that Buffett liked. It had a growth trajectory that some would say Tesla was more in an intermediate growth phase after sort of more surging. Is BYD also a name? Would you say those are both stocks that you like, Steve?
Absolutely. And look, there's just no disputing this. BYD is simply put growing faster than Tesla. So I think if you're looking for other names to look at, Tesla, BYD for sure. Look at the Koreans. Hyundai and Kia are doing awfully well. And you've got to give Rivian credit. I mean, they've been in this EV auto space for 6-7 years. They're already selling half the vehicles that GM and Ford are at 52,000 units this year. They've just raised their plans and they're heading toward profitability. So they're getting it right. The big question is, what the heck happened to Toyota, GM, Ford, the legacy manufacturers with all of this R&D money, this global capacity? They just didn't get the memo on EVs. I think they're going to be punished. And then there's a whole slew of firms that I think just don't make the cut. You know, Lucid really on air support here, being knocked out of the NASDAQ 100, losing dramatic amounts on every vehicle. So it's going to be a tale of two cities, the winners pulling away and some laggards really struggling to stay in the game.
One of the main reasons why Warren Buffett might be investing in Tesla is that the leading car company is the best in the EV market. Buffett prefers to invest in businesses with strong competitive edges, a loyal customer base, as well as having a well-known brand, and Tesla meets all three of those. Tesla has also shown remarkable investment in financial performance and its profitability over the last few years, despite dealing with various challenges and obstacles. It lowered its debt level while increasing its cash balance at the same time, and has also had a huge growth potential, enabling it to increase its production capacity and product range. Interestingly, Warren Buffett isn't the only one who has admitted that Tesla is an outstanding company. Charlie Munger, who also foresaw Tesla's success, has also pointed out reasons as to why it's a remarkable company. No doubt Charlie Munger did have his negative opinion about Tesla. However, it is important to note that he made those negative comments on the EV maker, and Tesla had not developed many of its current businesses at that time though, or entered into many markets like it has now.
We're talking Tesla. Shares are up about 107% so far this year. Kev, Dan Ives, the Uber bull that we have on the network occasionally, put a price target of $350 on this from $310, says it could get to $1 trillion market cap in 2024. He's still bullish, but he's always bullish on Tesla.
It's the question is for Tesla this year, and it's one of the Magnificent Seven. It's one of the charter members, so it's in the play with all these other names. But what's the demand for EVs going to be, right? Is it going to be enough? He's going to be the leader in EVs.
Right.
Is it going to be enough where he can get margins to go back up? Because, he's made his play to get market share. He's done damage. Remember, you're starting to see some mea culpas from some of the leading car companies, like pushing back.
Ford was one. They're pushing back production.
Switching to hybrids instead of pure EVs.
Yeah.
They're doing other things. So, but, what's the self-driving software going to be? Remember, that's $12,000 a car for self-driving, and people are paying it. So I think the problems are valuations. Does he continue to lower prices? They don't like that in the stock. Right. So you got to see some numbers. If the numbers show up in sales, then these price cuts and the competitive advantage he has will start showing up.
Yeah, his margins have come down, but as I mentioned, they're still above the others like Ford, GM. In this space, Joe. But Kevin brings up a good point. Is this all going to be about the consumer still wanting electric cars at this point? Or, are they going to run out of money where they actually can't buy new cars? Is that going to be maybe a theme in 2024? Your thoughts here, Joe?
I mean, that's a theme in 2024 for all the durable goods, right? I mean, the last print looked good today, but it's something we have to kind of keep an eye on going forward. So yeah, it's a story for Tesla, but it's a story for all the automakers. The only difference is Tesla gets a monster multiple where the other ones don't. I mean, that's the bottom line, right? Because of their first mover multiple that they get. It's going to be an interesting story. Dan Ives, as you mentioned, his call for the upside. I think it really comes down to the health of the consumer, because I do believe that there is still demand for the EV products, and a lot of it's going to come down to the demand in China and how much of the recession that we saw in China, that kind of deep recession, are we on our way out of it? Right now Tesla's already starting to raise prices in China, and they've seen some steady demand in this region. I think that they've kind of taken the steps that they needed to kind of squash competition here with the price cuts. And, now we got in an area where you talked about those margins, right? Gross margins, they did decline from 27% in June 22 down to 19% in October of this year. So, they pushed them down, they squeezed out competition, and can they stabilize prices at these levels? And then kind of get back into that above 20% gross margins. I think if they can do that, and if that's the story for 2024, then the company and the shares could do very well.
Tesla is one of the leading EV manufacturers in the world, with a mission to accelerate the transition to sustainable energy. However, the automaker faces a few challenges in the global EV market, like increasing competition, supply chain disruptions, regulatory uncertainties, and consumer preference. In order to overcome these challenges and boost customer demand, Tesla's made a plan. It adopted a strategy of cutting prices on some of its popular models, like the Model 3 and Y in Europe and the US. And while this did take a toll on Tesla's profit margin, there are a few reasons as to why it could be a good idea in the long run. First up, price cuts can help Tesla increase its market share and sales volumes in the highly competitive EV market. By lowering the prices of its vehicles, Tesla can attract more customers who are looking to buy more affordable and high-quality EVs. In the long run, this is going to help Tesla expand its customer base into new segments with younger and middle-income buyers who have previously considered EVs to be too expensive and inaccessible. It will also enhance Tesla's brand image and customer loyalty in the EV market, since by offering lower prices to its customers, Tesla can demonstrate its commitment to making EVs more accessible and affordable to everyone. But that's not all. Tesla has the best supercharging platform, and this charging network could even end up being a very profitable business for the car company. In 2023, Tesla opened its EV connector design to the world as a part of its mission to speed up the world's transition to sustainable energy. It invited charging network operators and vehicle manufacturers to use the Tesla charging connector and charge port in their own equipment and vehicles. And now there are a few reasons as to why this will be good in the long run. First up, Tesla's decision to open up the connector design will be of immense help to those charging companies. Likewise, since the network operators already have plans to use the NACS with their chargers, Tesla owners can enjoy charging at other networks without any adapters. Charging companies are increasingly adopting Tesla's charging port technology as the main standard for US cars. Companies like Blink Charging, ChargePort, and Tritium have announced that they're going to provide chargers with Tesla's connector. As the standard combined charging system, connector loses popularity with automakers. EVgo, which already provided Tesla connectors in 2020, stated that it will expand its NACS connectors to go towards fast charging networks across the United States. ChargePoint, on the other hand, will offer an NACS connector option for its products and upgrades for chargers in service. While Australia-based Tritium said that it would adopt the NACS connector to its chargers in the United States and make other markets able to decide whether or not they want to adopt it. These charging companies are beginning to recognize Tesla's advantage when it comes to superchargers, and it isn't going to be long before they facilitate Tesla's biggest assets. And also there's AI.
Is Tesla an AI play? I mean, Cathie Wood would tell you so. Elon Musk himself would tell you so. He talks about full self-driving. He talks about vehicles that go around in Texas and California for days without a person operating those vehicles. Where do they stand as an AI play and self-driving autonomous vehicles?
Yeah, I mean, obviously, Elon sort of, set the moonshot for automotive excellence when it comes to self-driving. Every automaker, I think, today is an AI company, just like I think that every tech company today is or has to be an AI company. But AI isn't limited to simply just the autonomous driving. There are a lot of other systems in the vehicle that leverage AI. So whether it's entertainment or communications or productivity or diagnostics, all of those things are going to require AI increasingly. And so, yes, absolutely, AI is a huge component of the Tesla story moving forward.
Tesla's entry into AI is remarkable, and it sets it apart from other car makers. We believe that the successful execution of an AI project could transform Tesla's growth and profitability and make it a technology-driven company more than a conventional manufacturer of cars. The fact is, Tesla keeps innovating with AI, and it stays ahead of the industry, and automakers are going to keep improving in the most amazing ways, and Tesla's stock price will be ready for significant growth, reflecting its earlier triumphs in the EV market. Tesla's leading role in EV production and the expected exponential growth of the EV market have all prompted many analysts to recommend that Berkshire Hathaway, Warren Buffett's firm, should invest in Tesla. Even Charlie Munger, Berkshire Hathaway's vice chairman, has complimented Tesla's accomplishments, recognizing its remarkable influence on the American auto industry. He even calls Tesla a minor miracle in the car business. Many analysts foresee continued long-term growth for Tesla, and it is understandable. While Tesla's stock value is much higher than its early days, investors who own substantial Tesla shares have the possibility of getting substantial returns. And that is no exaggeration. The numbers always confirm it. Of course, there are a few reasons as to why Warren Buffett may be cautious of Tesla, such as its high valuation, lack of a moat, and its competitive threats, as well as its erratic management. However, these factors could evolve over time as Tesla grows and develops as a business and becomes even more profitable. Do you think Tesla will be a profitable company in the future? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.